Trade finance relates to the process of financing certain activities in areas of commerce and international trade. Trade finance includes products such as lending, issuing letters of credit, factoring, export credit, and insurance. Bills of lading and letters of credit are old-world methods of managing the shipping of goods and services. There is a huge potential to replace these paper processes with digitized operations using blockchain. Conducting international trade requires a number of participants to interact with one another, such as exporters, importers, banks, shipping companies, port authorities, and customs. It involves manual processes, and there's a risk of documentary frauds. So, the process becomes ineffective and expensive. These challenges can be addressed using blockchain. Let us see how it works. Let us consider a typical international trade that has exporter, custom, importer, insurance, and importer bank. Each one of them has representative nodes connected to a private blockchain, which replicate transactional information as it occurs on the network. At any given point in time, the information ledger across all nodes is in sync. Let's look at a representation of the actual solution. To initiate the contract, the exporter uploads the necessary documents such as letter of credit, bill of lading, and insurance documents from the decentralized application. The exporter then submits the contract on the blockchain. Once the exporter submits the contract, a transaction is sent to the blockchain. Transactions remain pending until the mining is completed. A miner mines the transaction and adds it to the blockchain. Once the transaction is successfully added to blockchain, a unique address is generated where information is stored on the ledger, as is evidenced on the terminal on the screen. This creates a unique tamper-proof contract created by the exporter. The customs logs in onto the decentralized application. After verifying the relevant documents, custom officer approves the contract. The custom fee is processed on the blockchain. Importer logs in onto the decentralized application. In case the goods are damaged, which is the scenario here, the importer uploads the insurance documents and proof of damage on the blockchain. Insurer logs in onto the decentralized application. Insurer checks the insurance documents and proof of damaged goods. If the claim is as per the terms and conditions of the insurance policy, the insurer approves the claim. The payment is initiated and processed on the blockchain. Importer bank logs in onto the decentralized application and checks for the completion of the shipment. Once the importer confirms the receipt of the shipment, which is the case here, the importer bank initiates the payment. The transaction processed on the blockchain. Once the payment is successful, the contract gets completed. We observe that as the payment gets processed, the importer bank's balance is reduced to 519.83 ethers.